Hi, this is Zach Mayer with the Bulletin Board Heroes here on Share Talk for Wednesday, the 15th of April, sponsored by the UK Investor Show. Starting off with Avacta, which has overshot the runway in terms of the 60 pence broadening triangle target that we were looking for a few days ago. The current situation is that above 55 to 60p, which is where that line currently is, still looking for a possible best case scenario target up to 85 to 90 pence. Which is a resistance line projection out there from October 2017. Obviously, it's been a great ride for the shares to date. New face, at least in the near term, for the heroes is Bezant Resources. Here we've got a situation where the shares have come up with a bear trap below the 0.6 pence area, 0.06 pence area. And pushing higher today after being extremely oversold. Also breaking this line of resistance from March, running through around the 0.065 pence level. While we hold above that, looking for a rebound back towards at least the area of the 50-day moving average at 0.11, and perhaps as a best case scenario back up to 0.12 or 0.13, which was support on the way down in February and March. Stock which I looked at when the news came out about its successful funding to production is Bluebird Merchant Ventures. Nice gap up today out of the, or nearly out of the bull flag that we've had since the end of last month. Looks like we're also going to go into a golden cross here between the 50 and 200-day moving averages, which means that we can update and increase the potential price target on the stock. So up to 4 to 4.5 pence now, while we hold above the gap at 2.5 pence left over the last few sessions. The time frame on the move to the upside, probably the next month or so. On to a stock which is possibly the most unlikely candidate to be in the Bulletin Board Heroes, given its track record both fundamentally and technically. But Catenae has broken this trend line of resistance from the beginning of the year, running through 0.6 pence. Also looks like it'll close above the 50-day moving average at 0.55 pence today. If we see a close above the 50-day line, and especially above 0.6 and the resistance line, that could set up the shares for a move towards the top of a rising trend channel from the beginning of the year, as high as 1.6 pence. Obviously looks rather optimistic at the moment, but there have been several bounces on the 200-day moving average there just below 0.3 pence, and that does have technical significance. Let's see what happens. Stock which is also relatively obscure but trying its best to rehabilitate itself is C4X. Here we've got a break of this resistance line from the end of last month and the 12 pence level, and why we hold above that and the 50-day line at 11.75 pence. The best case scenario target here is up to 30 pence, which would be the top of a rising October trend channel. Obviously, we've got the 50-day moving, 200-day rather moving average of 25 pence ahead of that, but the big target there over the next 2 to 3 months up to 30 pence. Genedrive, another stock which has been performing rather well of late and also overshot the rather optimistic looking target that we had set a little while back ago for the shares, above 55 pence now, looking for further upside, and that could be towards the 90 to 100 pence level, which was resistance on the way down in early 2016. So possibly a bit more to go there for Genedrive, especially as we haven't actually, we're still in the run-up to a golden cross between the 50 and 200-day moving averages. ImmuPharma is a stock which is currently illustrating that almost any stock with or company with the name Pharma at the end is doing well at the moment. Here we've had a break of this resistance line from the end of November and the 12 pence level, which is just above the 50 and 200-day lines, and so above 12 pence, looking for a top of December rising trend channel target as high as 25 pence. Obviously, that would partially retest that spike that we saw at the end of November. And on to now Rainbow Rare Earths, which is another potential recovery situation here. We're breaking that falling wedge from the end of December with a gap to the upside, which enhances the bullishness there and suggests to us that at least while we're above the 1.7 pence level, which is the floor of the gap, we could see further upside, at least initially, to March resistance, which is towards the 2.7 pence level. Finishing off today with a stock which has been rather not as much of a hero as it has been over the last 2 to 3 months. Novacyt. Here you can see that the most ghastly of pullbacks for the stock today. Yesterday I suggested that support would come in towards the 450 down to 420 area. That's actually now almost become resistance for this stock over today's session. The low being towards or sub 340. 340, the 340 area was the target area on the way up, projected by that line of resistance from February. So for the bull argument to continue, despite the shaking of the tree and the rug pull that we've had this morning, 340 has to be maintained. And ideally, if you are not in the stock, you probably wait for an end of day close back above 450, just to make sure that the shares are ready for a fresh leg to the upside and a possible best case scenario target up to £6, which is the January resistance line projection. But very much in flux, as I suggested yesterday, and really 450 needs to be recovered pretty quickly for the bull argument to be maintained in the near term. Otherwise, we're probably looking at a few weeks of consolidation, as we saw from mid-February onwards after the rug was pulled there. It took the best part of a month for the shares to rehabilitate themselves. That's it from me today. More updates tomorrow.